Hey guys, Mata here from Forex Trader. So in today's video we'll go through my entry, through the reasons why I've entered New Zealand dollar on a weekly time frame. As you probably know, I trade only weekly and monthly time frame because it's the best ratio between screen time and return on investment. So let's jump into, okay? So New Zealand dollar printed a quite outstanding candle pattern on a pretty good location. So this was my entry candle, entry below the week. Entry is right here and stop loss is above here. This is entry line, stop loss, and take profit. So it's a little bit more than one-to-one risk reward, which is not ideal, but I really prefer taking profits in this zone because this structure is pretty strong. So I don't want to hold that too long. I just want to take profits on a first strong support, and that's it. But let's take a look about reasons for entry, which is probably even more important and attractive to you. So the first thing I've noticed is that we've got a nice trend line, 1 to 3 touches, and which was broken, and now the price was moving, in this case was price moving back to this resistance zone, which is very strong zone. But let's draw the zone. It's sort of a zone, okay? But you can see in right here, there is no candle, none of this candle closed higher than, this is the highest close, this candle. All these candles went through and closed by the end of the week below this zone, and after that we've got a broken trend line, and again price went up back to this resistance zone, which was tested and rejected very heavily with this candle, and this is a very good sign. So broken trend line, very strong resistance zone, and another factor is EMA 200. It is EMA 200 exponential. Okay, so we have actually we have one broken trend line with price action. Second, we have a resistance zone. Third, we have EMA 200, which is acting as a dynamic support and resistance, and we've got a pretty good candle formation. Another thing which I would like to mention is that this candle is very good in this particular location, because this is sort of a doji. I mean, it is channel on lower time frame. Let's take a look at that. It's, as you can see, here's a sort of a channel, and this is a very good and common price movement on a strong structures. So this candle is actually, we've got a pretty strong candle, some sort of undecisive strong candle, but a lot of rejection on a up to the downside. I mean, and again another undecisive or sort of channel candle, which is very good sign for a potential trend change. And after that we've got a very dominant candle. Why I'm telling you that? If this candle would be like this one, very strong and powerful candle, I would not enter. So I really like to see that the candles before my entry, the candles before the dominant candle, entry candle, are slowing down, are sort of a channeling, or are some sort of a rejection, and so on and so forth. So we'll see in a few weeks, in a couple of weeks, how this will play out. So we will see it later. Take care, guys. Okay guys, so here we are back 4 weeks later. I have put my stop loss from up here to down there, above these 3 candle wicks highs. And after our entry, we've got 2 doji candles, which was actually pretty good sign at that particular time. After this kind of a channeling formation, there's usually a strong breakout. So because of bearish odds, bearish bias, I have expected that it will be pretty strong to the downside, and it actually was like that. And now we are just about to hit a take profit, and that's it. So when the price will hit take profit or stop loss, I will show you that. Okay, so no matter loss or profit, you will see that. Okay guys, so price reached my take profit, and that's it. It took actually 4 weeks, but I believe that there's some potential to the downside as well. I also want to show you my another account. Actually, on this account I'm trading very good setups with a little higher risk than, it's around 1.5% to 3% per trade risk. And I also trade on another account a little bit more aggressive, still on a weekly time frame, but more sort of I trade frequency on this account. So in this case, I have also shorted a New Zealand dollar, but with a retracement entry. That means I have set sell limit right here and put take profit here as well. So on a classic account, standard account, I have set sell stop below this candle, but in that case I have put sell stop right here, stop loss above here, and take profit here again. Okay, so now let's take a look at difference between these two and from risk reward point of view. So here was my first entry on a standard account, and a stop loss above here and take profit right here. Risk reward was a little bit more than 1-to-1 on the standard account, but on a this, I call this frequency trading account, the entry was right here at the peak. Actually, I got a little bit lucky that I have entered it, and in this case risk reward was a little bit more than 1-to-2. Okay, so you can see that what retracement entries are good for. There are also many times where you actually miss a retracement entry, so for that reason I use 2 accounts, one with the retracement entries and normal entries, and another account only with classic normal entries, so sell stop below there and the classic. Okay guys, so thank you for being with me here today. I hope that you enjoyed and learned something new, especially the first part about why I have entered New Zealand dollar short. This is a pretty valuable, try to study that. And yeah, if you have any question related to technical trading or any basic regular question, let me know in the YouTube comments below. I really respond to each one of them, and try to hit me on Facebook as well, or even Skype if you want some more in-depth talk. With that being said, guys, wish you best of luck and see you in another video. Take care. Bye.